Alright, update on Bitcoin in correlation to the stock market. Now, let's see what's going on today. On the daily for Bitcoin, you can see we are still kind of in the dumps as of the time of recording this, but what is interesting is you hop over to the lower time frames and you can see that we are receiving a very big bounce right now. If we come down to the lower time frames, you can see you're shooting right up to your 1 hourly EMA ribbons, and while I would personally not get bullish on a bounce until we do start breaking above some of our important resistances. It is quite nice at least to see this big wick being bought back up on Bitcoin. We do have some very strong support coming in at 35,000. So it would be very ideal for Bitcoin to hold this 35,000 region. You know, like I said, if we did close that daily candle, if we come over to this chart over here, I said specifically, I think if we close below 37,500, then, you know, we might be coming back down to these 33,000 levels. But, you know, if we look at the oscillators and they're completely oversold at this moment in time. So I wouldn't be shorting or betting for Bitcoin to move further. In fact, I'm actually of the complete opposite opinion. I am DCAing at these prices down here, and we will jump into the logarithmic growth curves in probably the next video. I'll do a separate video on those so we can microdose the updates on the log growth curves. But we're coming right down to 1 deviation oversold. We've already broken below the floor of the utmost lowest Fibonacci band, and 1 deviation oversold, which is historically always where the bottom is down here at this 33,000 level. So let's look at what Bitcoin is doing in correlation to the stock market. So if we come over to the hourly time frame so we can see a little bit closer to the heart where we're actually moving and in what correlation to the stock market. Now, if we jump over to the stock market, you can see yesterday we talked about this. You opened on the stock market and you opened in the red, and we just completely landslided. And we've done something very similar today. You know, you can see we've opened and we've come right down. Now, how many bars of data is this? This is 9 bars, so I don't know why this says this is 1 day when we're on the hourly candles. This is 9 hours worth of data traded here. And if we come back to what Bitcoin has been doing in the past 9 hours of data traded, you can see Bitcoin was right here, and on the stock market opening, we started to landslide with the stock market. This is why I like to correlate and talk about Bitcoin in correlation to the stock market, because they do move in tandem. You can see the SPX went down for 9 hours straight, had somewhat of a relief rally, tiny relief rally really, and Bitcoin is seeing something very similar. So definitely some interesting similarities going on in the stock market. I would also like to point out that the DXY, the dollar, is still showing extreme strength, and once again I am going to make a separate video on a update of the triple top theory on the dollar. We are in this next accumulation range. If we do zoom out a little bit, you can see we had these 3 macro peaks on the dollar before, and this time we only spent 2 weeks kind of chilling around the top. But most coming all the way back to the data points in 2016, late 2016, when we did initially top out for the dollar, we actually spent four weeks worth of data traded, just kind of chopping around and going sideways before we inevitably landslided on the 4th week. Like I said, if we come over to the second peak, it was more like a 2-week cycle, and then after that we kind of started crashing down, and it took a little bit of time to come down to much more of these macro levels. And you can see it was the same here. So, you know, after you did have that initial breakdown, you still spent the good part of another 100 days or so waiting to have a macro top on the dollar. So I think a lot of people think that, you know, Bitcoin has to make a decision today. I'm not of the opinion that Bitcoin has to do anything today. It has to do anything this week. I think Bitcoin can chop around for the next year, and I really don't want to see that happen. I mean, I'd rather we go up or go down. If we go extremely down, I get to DCA back into the market. If we go up exponentially, I get to dynamically DCA out of the market and take profits. But when we go sideways, it's just very boring. So don't think for a second that Bitcoin can't chop around in this range for another month, and then don't think that it can't break down and then spend the good part of 100 days chopping around before we do confirm that macro top, because that is exactly what we did over here. We spent the longest period of time. If you draw it from the top to where we really came down and took out the lows, it was 126 days worth of data traded. If we come over to the second peak, you can see this was 70 days worth of data traded until we started. Well, I mean, technically, if you want to talk about taking out the candle body lows from here, you could argue it's, you know, depending on where you want to draw it from, it could be anywhere between 126 days, or if you want to consider when we really started getting rejected below these EMAs, I'd probably say the best way to draw it is from where you then fell below the EMAs. So you've got 133 days and 70 days respectively that we were just spending topping out over the macro time frame. So, you know, something like this, I mean, even on average, if we just take a rough estimate average of the both of them put together, you could see this could really go on into, you know, August of this year. I mean, this is what I'm saying, we can chop around for the longest period of time. The dollar is a slow mover, and we're coming into a macro decision right now. Do not think that the dollar is just going to go boom and just start rallying exponentially like that, and don't think the dollar is just going to go boom and then Bitcoin's bull market will return like that. I do think we are at this kind of mass capitulation stage where we do need to sit on the sidelines for a little bit and really wait and see what happens with both the dollar and the stock market. Now, what's interesting about what's going on in the stock market right now, let's hop over to the daily time frame, because I want to show you that we're really on our last legs. Even though we are having this really small micro bounce, you know, we're below all of your EMAs, all of your trend lines, all of your moving averages, your momentum indicators look terrible right now. So I'd definitely be sitting on the sidelines. Don't get it twisted. I am a macro Bitcoin bull, and I'm actually happy for these lower price targets because I do love dynamically DCAing into the market as Bitcoin goes down. A lot of people just want to buy Bitcoin once and then watch it go up forever. I'm in Bitcoin for the long term, so I really do welcome these lower price targets, and I think looking back on this event, this capitulation event that we're seeing right now, I think in the next 2, 3, 4 years, if you get to say, you know, I bought Bitcoin at 36,000 or I bought Bitcoin at 33,000, in a couple of years time, I think people are going to be like, wow, you know, you bought pretty much the exact bottom, you must be tons and tons up, because I do think this region is going to be the bottom. You know, a lot of people are calling for 28,000. I really don't see 28,000, and I say that because Bitcoin, the majority of the time, it puts in macro higher highs, or higher lows rather, and you can see the most recent macro low was down here at 29,000, so I would not be expecting us to come back down and test these lows. Does that mean that we can't come down very close to, you know, 33,000? Perhaps we could even have a capitulation wick down to 31 or 30,000 and then bounce out of here. I definitely think that is very likely to happen. Now, like I said, if we look at the SPX, you can see we're literally coming down. We've got a 1, 2, 3, 4, 5, 6. I mean, we've been bouncing on this this trend line for quite some period of time now, and we are having a somewhat sizable move below the trend line, and we will jump into some other stocks briefly. But what I really wanted to show you is what happens on average when you do lose the 200-day moving average and you don't break above it, retest its support, and then get out of there very quickly. So bear in mind, this trend line that you're seeing right here, this is the 200-day moving average. This is the moving average that takes in the average price of Bitcoin compared to the last 200 days worth of data traded. So it's simply the summation of all data points from the previous 200 days. So if we draw it back, you can see this moving average would be incorporating data from back here in the 22nd of July. And as you can imagine, you add together all of the data points and divide it by 200, and you get the average price in the past 200 days, or also known as the 200-day moving average. So why does the 200-day moving average matter? Why do we care if we drop below it? Can't we just exponentially pump back above it and be out of here in no time? Well, yes, I mean, we can. I would not say that data has to play out exactly as it has before. But historically, if we look at the trend, you can see the SPX, the stock market, normally always holds the 200-day moving average in an uptrend. You can also see it holds, I believe this is the 200 EMA. Yeah, you've got your 200 EMA right here. So you can see once you did break below your 200-day moving average, we had a mass capitulation event. We actually went down 28 to 29%. Let's see, just for nostalgia, how far we are down at this moment in time. We're only down about 9.5%. So if we did come down to much lower levels, you could expect a big wipeout for the crypto market. Once again, you can see when we are above the 200-day, when we do back test it, we always go up in these bullish rallies. And as soon as you come down and start to lose it, we have these mass capitulation events. So in this instance, this was a 15% drop. Once again, you zoom out and you see, you hold the 200-day support and you have an exponential bull cycle for the stock market. We zoom back again, and what do you notice? Once you majorly lose the 200-day moving average, you normally have these big capitulation events. This was a 10% drop. This drop was approximately 12%, and I would pay more attention to this 12% drop because in my opinion this was a breakdown. We tried to retest it as support and then we broke back down again after we got rejected. So I'd be looking at this as the major move below the trend line. This was a very, very quick-lived fake out. So it is important to know that, let's see how many data bars this took off. So this was 5 days worth of data traded below the 200-day moving average, and we did manage to make a recovery. But what is important to know is we have not found a trend point. Like here you can see 2-3 days worth of data traded below, we got out of here. But historically, once you start putting in a week's worth of data traded below this point, even if you do have a dead cat bounce back up to it, you normally landslide. Once again here you can see there's 3-4 days worth of data traded below the 200-day. We managed to rally. Every other time you spend a little bit more than that, we do have these capitulation events. So once again here you can see 6 days worth of data traded before we rallied out of here. Here I imagine this was 6 or 7 days worth of data traded. Yep, this was 7 days worth of data traded. This was 3 days worth of data traded. And as you can see, once you majorly lose the 200-day moving average, 16% capitulation event. If we come back to the previous, after the rejection here, you can see 9% capitulation event. So while it is possible to go below the 200-day moving average and then still remain bullish, on average it does seem like after you do lose the 200-day moving average, you normally have these big capitulation events, and on average it seems like you've got 25, 15, 12, 10% drops, 16, 9. So I mean the bottom range that we can expect is around about a 9% drop, and the most negatively euphoric you can get to the downside, we've previously seen 28% drops in the stock market, which could mean a huge liquidation event. Now, one thing that is very important to note is that when you do look at these mass capitulation events, they do normally take place over a very short period of time. And by a short period of time, bear in mind this is 61 days worth of data traded. That is still a decent amount of time, but in the scheme of things, breaking down, breaking back up in 61 days, and then a couple months later putting in new all-time highs is not the biggest bear market that you could possibly expect. So I do really think the stock market and Bitcoin is closing down to that bottom region, but there is still the potentiality we could go a lot further down. Before we do wrap up the video, let's check out the other stocks and see how they are doing. You can see the Nasdaq is breaking down below this crucial level of support. A lot of these stocks are breaking down below their trend lines, and it could get very ugly if we start putting in daily closes around this region. So I would definitely be sitting on the sidelines for Bitcoin. Unfortunately, I do think there is a very high chance that we could come down to 33,000, especially if the stock markets start pushing down below these important levels of support. You can see the SPY, the SPX derivative, is breaking down as well. We're breaking below this important trend line box. If we look at Facebook, Facebook is once again moving down in this channel, breaking down below your daily EMA ribbons. Google is kind of just chopping around in this region. You can see the daily close. We did move down a tiny bit. I don't know why this is green, but you can see this is actually down from yesterday's close. Oh, that's the wrong tool. So yeah, it should be just about 0.5% down, or you know, couple of percent from where we were yesterday. If we look at Tesla, you can see Tesla's breaking below this important trend line as well. Really not good. Coinbase is already in price discovery to the downside. It was in price discovery since the 21st of April, once we confirmed the previous bottom as resistance, and we've done something very similar where we've come down, made a new bottom, and today we've tanked below it. So you could see if Coinbase closes below $111, you know, we could once again enter one of these price discovery phases to the downside that could potentially carry us down a nasty amount. And like I said, gold is rallying, the dollar is still chopping to the side. So some very worrying signals we're seeing at this point in time. I am going to wrap up this video. I feel like we did have a very, very long video where we did go through everything to correlate with what's going on in the stock markets, what's going on with Bitcoin, and most importantly, what's going on with the dollar. So I am going to be making a couple more Bitcoin videos today. I do think it is important to make these Bitcoin videos providing alternate perspectives as we do come into these very dangerous times. I'm going to be looking at the Bitcoin logarithmic growth curves later, and I might have a few other ideas for videos that I might do on Bitcoin, but I want to provide a macro perspective on what is going on in the markets. So I'm going to be hopping off now. I'm going to be going and checking out the Bitcoin logarithmic growth curves and then doing a microdose update, seeing how low we could potentially go if the trend remains how it has previously done with the Bitcoin logarithmic growth curve. So that's all I've got on Bitcoin in the eyes of the stock market. As always, none of this is financial advice. It is just my opinion on the market, and as always, you've always got to do what's best for you. Cowboy out. Peace.